show you the stock moves. The Super Bowl, Joe, is here.
It is, and I hope the Federal Reserve is paying attention so they could see what exactly is going on with the economy, because we just had an abundance of negative news today for all of us to digest. We're going to see what happens here with Alphabet and Microsoft. These are two names within technology that are universally loved by all. When you're talking about these companies, you've got 50 buys, no sells, maybe 3 or 4 holds, and price targets over the next 12 months, which are 40% higher.
You own them all that we're going to be talking about here. The key for Google, Alphabet, which we do expect out momentarily here, ads, and ads.
Different type of ads. I think hopefully they'll see resiliency because of the exposure to search ads versus what Meta and Snap is going to give you with social media ads. So I need to see that resiliency. Hopefully we'll find out in a few minutes that that, in fact, has occurred.
All right, told you our guy AP, Adam Parker, is here as well. How much is literally riding on these results this week?
Well, I think these names are microcosms, right? You have everything. You got a little currency, you got a little wage pressure, who's got pricing power, ad spend, right? So there's a lot you can sort of learn from these type of results. I mean, I think ads has been a really interesting thing. You got the old school Omnicom, IPG beating. Everyone thought that was dead. And then you've got, Snap blowing up. So I think there's a lot riding on it in terms of barometers for other names that got to report in the next couple of weeks.
We're going to get a reality check in some respects, too, that these are considered to be among the greatest companies in your portfolios if you own them. The reality check being as great as the growth is slowing. Google, for example, Alphabet is expected revenue growth of 13%. That'd be the slowest rate in some 2 years. That's the reality check of kind of where we are.
Yeah. I mean, good companies and good stocks can be different for 6 or 9 month periods. I mean, I think Texas Instruments and Visa are 2 of the 5 most profitable operating margin businesses in the entire stock market. So they're obviously great businesses, but we have to see whether trends are slowing. We talked about this last week. We talked about it a lot. Are the negative revisions in the price? Not yet. The companies missing are still going down.
Hold your thought here, because Microsoft is out. Steve Kovac, tell me.
God, it's a miss across the board for Microsoft. EPS, $2.23. We were expecting $2.29. Revenue, $51.87 billion. That was another miss. We were expecting $52.44 billion. And then Azure cloud growth, that's also a miss, only up 40% versus CNBC's review of analysts. We were expecting about 43% on that, Scott. So disappointing across the board, but Microsoft also blaming those foreign exchange headwinds for some of this, Scott.
Yeah, and they warned us about that, Steve. Thank you very much. I know we'll see you again soon. So here it is. Cloud. I said ad for Alphabet. It's cloud for Microsoft. That growth of Azure.
That's it.
That's all it's about.
That's all I needed to know.
And that's at the lowest end of what people were hoping. You're hoping for 40 to 50 in that range of growth, right?
I wanted 45% at a minimum. I was hoping they would deliver closer to 40%. Not good with a currency headwind. That sets up as problematic for Microsoft.
Yeah, I mean, you got the currencies, Adam, that all of these companies, particularly tech, which get a large portion of their revenues from overseas. This was the precursor to what we're going to see, what they told us, 6 weeks ago? And here it comes to fruition in this report today.
Yeah, it looks like, I can't do the numbers this quick, but you missed by 1% on revenue this quarter. You roll it through the 23 numbers, little decremental margin. You got to have numbers down, 7-8% for next year or something like that. I think when you take a step back, Azure is a great business. Plus 40 in this tape is still growing pretty good, and they still have pricing power. But I think what people wanted was a higher number, and so the stock's not going to act well when expectations are disappointed.
All right, so we got a double miss, top and bottom for Microsoft. Google, in fact, Alphabet is out. D. Bosa, what do you see?
Scott, I'm seeing a few minor misses, but perhaps not as bad as some were anticipating. So that is why shares are up about 2.25% in the after hours. Revenue coming in at $69.69 billion. 69.9 was expected, so just a tiny miss there. EPS, though, a miss by about 7 cents. $1.28 was expected, coming in at $1.21. Cloud, this is important, coming in at $6.3 billion. That is shy of the 6.4 that was expected. YouTube as well, which we know has struggled broader than search advertising. That came in light as well, $7.34 billion versus $7.5 billion. Again, minor misses here, and that may be why shares are actually popping now up nearly 3.5%. We'll continue to dig through this and bring you more details as we get them. Scott.
All right, Dee. That's Dee Bosa with the latest there. What you're going to get here in some respects, Joe, and we've kind of got this as earnings season got underway, not as bad as feared. Not great in many respects, but not as bad as feared. And you have to decide as a market, as an investor, which side of that boat you're on. If you're okay with not as bad as feared, if good is good enough in the environment we're in.
Especially seeing the ad revenue figure, which comes in slightly higher than expected, that sets up nicely for Alphabet. Remember one thing about both of these companies before people out there are ready to hit the sell button, which I am not, even though Microsoft is down significantly. These are companies with very strong capital allocation strategies. They're buying back significant amounts of shares. That's critical in the environment that we're in now, where, as you said before, growth is slowing.
It makes you also think, Joe, that what Snap delivered, that bombshell, when the shares got crushed, was more a Snap issue than perhaps
more a
Alphabet
Snap and
Twitter.
Meta.
Well, Meta, well, we'll see.
Right.
We will see tomorrow. The fear was that Snap was the precursor to Alphabet and then to Meta. And maybe not so much for Alphabet, though it's in the early moments after the report hit. Dee's going through it, of course, and we'll still figure out what's in there. But at least it's not the crater cliff drop that we got the other day.
Yeah, I guess the way I look at it is these businesses are what, $300 billion in annual revenue, another $225, $525 billion. Walmart's $500 billion. Amazon next year is supposed to be these businesses are so big they can't be immune from an economic slowdown. Even if they're gaining share and they're doing the right things with capital allocation, they can't hide from an economic slowdown when you have $500 billion in revenue.